Hello. What a great occasion to be here, not only with two of the brightest people I know in the angel world, but also two people I really like. That feels really great. Today we're going to talk about the pre-seed and seed stage, the mysterious stage when nobody has a clue what they're doing, investors included. And since Jeremy, Sophia, and I have done a lot of different investing in this stage, I hope that we're going to make complete clarity of that world. Hope you're ready for that. The first thing I would like to talk about are, like, which are the players? Because like now you're a founder, you're looking to raise your whatever 500 to like 1.5 million dollars, and you go out there in landscape, and there's all these different players. Do you want to like, who are the ones that you mostly want to co-invest with? And I think that look at yourself now as your angel and not as Atomico.
I think it depends on the type of company. Normally, I try and understand what is the sort of common ground that we have, and if I find an entrepreneur that I really sync on the messaging, then I try and think of other investors that I know will get excited about the same thing, because then we know it gets so much easier.
But do you prefer going with like other angels? Do you prefer going with like micro VCs, or finding a VC earlier, an angel group?
I think actually other angels when it's the angel stage.
Yeah.
I mean, I've done a few deals together with some of my former Spotify colleagues. That's always a good thing, because then it's people that you have worked with, that you know and that you trust.
Yeah.
And normally we have very specific sort of areas of expertise. So when my colleague who's been a former CTO at Spotify had done a tech diligence, then for me that means something. Or when I co-invest with you in sort of health startups that I know is one of your special areas, for me that means a lot when you rate them highly.
What about you, Jeremy?
Yeah, I think at the earliest days, it's basically friends and family, as we talked about. There's always the option to bootstrap, which I think is probably something that's should be done a lot more potentially. And then there are your angels, and then now there are your pre-seed funds, and then there are your seed funds, and I lose track now.
Yeah, exactly.
I think at that point, that's probably the universe that you're trying to look at.
But we have it feels like we live in an absolute excess capital world, which I think is very weird for a lot of founders hearing that. But I think that personally, I really like microfunds, for example. I think that microfunds add a lot of value because they're like a $5 million, $10 million fund, and they're going to be acting as an angel, but they're going to have the reputation problems of a VC. So they kind of have to mind that. What do you think? Do you think micro VCs are like good or bad for the startup?
Oh, I think it's really good. I think it brings a lot of value and some sort of depth to it.
Yeah.
And I normally like to sort of work with people, and when you've done one deal and it works out, then normally it sort of follows on. So.
Yeah. What about angel groups? Because I mean, everybody on their kitchen sink are starting an angel group suddenly.
Yeah, I mean, angel groups. I mean, the one thing I would say about angel groups is that they're groups. So, unlike a micro VC, which typically will have one or two partners, or an angel, which is one person to make a decision, an angel group, the benefit is that it is a large group. So, you may get the benefit of, more heads around the table and more experience around the table. But it's also a group, so there's a potential for taking a bit longer or having a bit of uncertainty around the decision-making process and so on.
And I guess it depends, of course, if the angel group is run like a consensus-driven group where when they all say yes, or if it's actually just a deal-sharing group.
Yeah, I think what you want to avoid is the type of situation that can occur that if it's a group with lots of good names, and everybody thinks that someone else have done the DD, and everybody's just tagging along, then that's kind of risky, and I would say unprofessional.
And I would say from the founder perspective, I mean, just like anywhere along the train, is sort of do your due diligence, right? So if you're going to meet an angel, you're going to meet a VC, find out what they like to invest in, find out what the investment process is, find out what they've done before, talk to founders that they've invested in, and then also be very clear to sort of the investors. If you're talking to an angel group or VC, you should be very clear and demand from them what is the process, right? How long is this going to take? How many meetings does it take? How do you make a decision? And what's the sort of next step? And I think it's up to the founder to sort of like push that forward, because there's definitely a lot of angels out there who tend to sort of say, oh yeah, I'm kind of in, or I'm really interested, but that doesn't necessarily mean that they've written a check yet or will write a check.
And I think that's the thing I think that more people should do is ask. I mean, all the way from angels, all the way up to VCs, what is your process like, and where are we in that process?
Exactly.
Because I think when you've done it multiple times, like I can ask like the people I invested in and saying, oh, so have you been to the partner meeting? And they go, no, but the person on the other side loves me. And it's like, what's their title again? Associate. Okay, great they love you, but can you please get to the partner meeting? Because that could mean absolutely nothing.
Yep.
So it's really tricky. I mean, we talked a bit yesterday about like good angels, bad angels, good VCs, bad VCs. And I think that, I mean, we've all had different experience of that. Like, would you share, like, what should people look out for? What's really bad signs on what's a bad VC and what's a bad angel, and how bad can it go?
Oh, a good one. I don't really have the answer, but I think you should always sort of assess people that you work with and only work with people that you trust and have a good idea. Sometimes that's hard because you don't get the time in.
Yeah.
I mean, we talked about that example with a pretty nasty angel that we didn't appreciate, but how to avoid them, I don't know.
No, exactly.
It's hard.
Yeah, I mean, I would say that, like, just like everything else, they're bad angels, bad VCs, and they're great angels. Probably some of the easier ways to tell, obviously talk to other portfolio company founders. I think some of the things that are maybe less obvious are maybe people who don't really have an understanding of what angel investing is. Maybe they put a little bit more money than they expected to or would be expecting to. So that's something interesting to know. Typically when I'm investing in a round and there are lots of angels in it, it's very typical for the founder to tell me the guys who write the smallest checks are actually the guys who take up a lot of their time because they're sort of nervous about it. They want more updates. They want to make sure it's okay, and without sort of understanding that angel investing is very, very risky, and you sort of have to let the founder do what he needs to do. And
but
get off his way.
I would say it's also on the other side. I think sometimes when I co-invest with other people and they say, like, I could take 200K in this round, and they're an angel. I just feel like, should you, like, you're not going to run this company. This is not your next big project. It's like you're an angel. They're going to do whatever they want for the money.
Yep.
And if they say 5K, I usually go, okay, that means like, but it's like there's a sweet spot I find when people want to do like 20 to 50K US or something, when I can feel like, okay, you know what you're getting into.
Yeah.
I think a normal question for me always to ask the angel is, how many other deals have you done like this last 12 months? And if they say none, I usually like ask myself if they know what they're doing.
Yeah.
And I think more startups should ask.
That's good. One reflection is also that if you're an angel behaving badly, I think at least in sort of the ecosystem in the Nordics where I operate, it's going to come back to you because, it's such a small community. So you need to have a good reputation. You need to be really sort of add value and be a sort of valuable person to work with. Otherwise, you won't get access to any more deals. So hopefully it's a sort of system that cleans out the bad seeds.
That's really, sorry.
Yeah, and I would say from the social proof perspective, I mean, or at least reputation perspective, I feel like VCs are in a sort of range. I mean, some people might say all VCs are bad, but at least they're in some sort of professional range.
Hey, we work at VC.
Yeah, sorry guys. But they can't be that bad. And at the same time, they also can't be like 100% aligned with founders because ultimately their main objective is a return for their investors themselves. And whereas an angel can sort of be all over the spectrum. They could be like the best angel ever, super selfless, spends all their time working with you, super helpful. Or they could probably be your worst investor. And that's what I usually see because an angel can be 100% disaligned with you. If he decides that you've disrespected him or he doesn't like what you're doing anymore, he can do, and I've seen this, everything in his power to sort of destroy a company. And so it's just a much wider range of spectrum when it comes to angels.
Yeah, it feels like, VCs, like knowing from both own experience and seeing other VCs, like VCs are machines built to do returns. So it's like clear, they're going to be asking for certain things. And just the other day, a friend of mine pinged me and said that the startup, an angel was asking for if there was an exit above a certain number, he wanted a trip to Bahamas and a house and lots of stuff. And it's just like, that is clearly like unprofessional. But as you said, like bad angels can be really bad.
Yeah. But I think the best angels are, probably the best investors you'll ever have. I would say on the flip side of that, because they can always be by your side. Even from a CEO relationship, right? They'll be willing to coach you. They'll be willing to have your back, even if maybe it's not even in the best interest of the company, but they want to be in the best interest of the founders. They can do that. A VC can't. Yeah. Yeah,
I agree. It's like a true partnership. You want to stand by the entrepreneur in the goods and the bads and.
Yeah, and I think that more startups, more CEOs, more founders should, when they have a discussion, when they meet one of you guys or me or anything, what I think one they should do is like before we sign a check, they should ask, could you do the intro for this person? Could you help me look at that? And if the angel goes, I don't really have the time, or comes back with weird feedback, maybe that's a good sign.
That's a sign, yeah.
Or if they sure, like let's do this and here's my feedback. I think that more people should just ask stuff from the angels before they sign the check.
Well, one of my top portfolio companies always talks about how VCs promise him a lot of things, and then he would actually like to put that in the document. If you don't deliver all of these things, then let's claw back some equity.
Yeah,
exactly. Make them work.
That's nice.
Yeah.
And then it's like, I mean, how does one? The other question is, so now that we have this landscape of all these like myriad of people wanting to invest and everything. But then the question is, how do you get in contact? I was just actually standing in coffee line over there, talking to another VC about a startup, and the person in front of the line turned around and said, "I heard you're talking about digital startups. We're a digital startup." And he was like, I had to go up to her afterwards, like, that was great, like, well done. It was like slightly bad timing, but like, great, you did it. But how does one do that? How does one get in contact with you guys? Like, how does one get a signed convertible note from you?
I think it's about being well researched, sort of understand, if I'm passionate about a field, then understanding that and send me stuff that feels relevant. And in that aspect, Twitter have actually been a sort of good source for me, because if you look at what I'm posting on Twitter, you get a good idea of what I'm passionate about. And if you then DM me something around that, it's a good likelihood that I'll get excited. So that's one way. But I would say the best way is probably a warm intro from someone, and preferably an entrepreneur that I already have worked with and trust, or other investor friends.
Yeah.
Yeah, I would say it's pretty much the same thing. Either you've provided some sort of signal in some shape or form, whether it's something on Twitter, having a good Twitter following, or responding on Twitter and creating those relationships, or I think a warm intro is probably the most common way. Like, I've taken some cold emails, but they tend to be very, very well written, very succinct, and it's very clear that they've thought through this, and there's a specific reason why they want to reach me, rather than sort of emailed 1,000 people, or at least they did it. Even if they did it 1,000 different times, that's still a good sign.
Yeah.
Yeah.
No, but I think you can sense those emails when you get a bulk email from somebody asking for money and they have no do. I think that actually, I think personally, I really like when people like respond on Twitter and actually don't do DM, because then they can't like just spam you. Like on DM, they can just write 50 things and there's no accountability. But if they do them public, they can't just like reply. It's like we can have a conversation, and then I can say, here's my email address. And then when they email me, they can say, we talked on Twitter, blah 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 blah. And then of course, like I'll have to do the meeting, and they have a good chance.
Yeah. What's your way?
I mean, referrals is number one, and it's horrible because it's also very non-inclusive. It means that like it's going to be, we talk to this other founder, and that means this new company is kind of course, similar to age, gender, ethnicity, background, everything to the other founder, of course. So it's tricky to find new deals.
I can provide you with good deal flow through my angel network.
Exactly. Tell me about your angel network. This is great. She's doing a good plug here.
So with Atomico, we started a new angel program just last week. And I'm excited about it because I think we will actually get a broader sort of scope and a network. So what we're doing is that we're involving 12 angels, this cohort. They're given 100K per year to invest. They need to invest in a tech-enabled company. But they're allowed to make the decisions themselves. They don't need to go through us. So they make the decisions and we wire the money. We get new people in after a year. And we have a good spread of really talented and amazing people that are kind of in the depths of the local ecosystems in our core geographies. And I'm excited about getting new people on board, because that means that we will also generate a huge sort of alumni network between all of these people that are then sharing deals with each other. And hopefully, learning how to angel invest if you haven't done it before, and feeling comfortable in the investing space. And I feel like I want to sort of demystify investing a bit and make it more open and accessible.
Yeah.
And hopefully we will, get good people from it, and maybe some will eventually be hired or work in VC or start new companies. But I think lots of good things can happen when you bring good people in together.
Yeah, I think it's just amazing because most people who can start angel investing, they built their company, they've held this whole career, and they're plugged in to another like layer of the ecosystem suddenly.
Yes.
And then it becomes like a referral system. But
so it's almost like we're activating a generation, a bit premature because it's just before they have their own liquidity event.
Yeah.
But I think that's also when you have one of the best deals flows, when you're sort of in the midst of it.
Yeah, I actually have said yes to be an advisor to one of them because I'm an angel investor in one of them, and I actually think
that's so cool.
But I think that's needed though, because I think they're going to run out and meet a company, and like I remember my first 10 angel investments probably that I had no idea what questions to ask, and I think that like what does good look like?
Yeah.
And I think it's good to be able to help these people. It's like how good is it, or like are they the best company in the whole of Espoo?
Yeah. But that's what I love, that we can sort of share the know-how so that more people can do it.
Yeah. No, I love this
Should
program.
scale it up. Yeah.
I think there's so many people out there who, like in the industry, who just, as you say, don't have the liquidity and would make great angels or great mentors for people. And putting it out there, I think one of the most important things in sort of angel investing is to sort of have a large portfolio of investments as well. And I think an sort of understanding of the risk involved. And so being able to enable people through a program like where at least you're covering a lot of the risk for them, and they're sort of allowing them to sort of give back to the community. I think it's amazing. I mean, that's great.
And about risk, actually, it's interesting to think about different angels with different risk profiles, good and bad. I think that, I sometimes have a hard time with like real estate investors who come in and ask for like cash flow positive within 18 months or something. I'm kind of allergic to that. But on the other end, it's like, where should one put oneself? Like, we had a bit of a conversation yesterday, which was really interesting, how like the numbers would differ that much. But where do you see like your target like return on investment is, like when you look at a company? Because you have rather different profiles on that.
Yeah, we have. I mean, from my end, it is. The alternative for me is to put my money in the bank, which is a pretty boring and not so smart way to utilize my money. So for me, when I'm looking at a company, I don't have in mind a 10x return. I mean, obviously that's great if it happens, but it's not what I expect from them. And it also gives me access to people that I most of the time admire and I want to learn from, and to a context. So for me, it's more than just financial return. But for me, I'm happy if it's like a 2x, 3x, 5x. That's good for me.
What?
Yeah, I mean, I'm a little bit different, actually. I actually don't like it when VCs tell me, oh, hey, we have a good deal for you. It doesn't work for us because, it can only be like a 5x, but, 5x for you as an angel is great. And then I get sort of like, what? What are you talking about? Like, I have the same, return profile or like return needs that you guys have, and from a diversification perspective. So in my opinion, even a company, like starting a company is so hard and it's so risky, and even one that that whether it's a restaurant or it's a tech startup, I feel that the chance of success is so low.
Yep.
that when it happens, I'd like to be able to see it to be something very, very big, and so I'm looking for something with significantly higher returns than that, or possibility, and as well as expecting a very high failure rate, unfortunately.
But that also means that if the startup is in a fork of a road of taking extremely high risk and betting the farm, versus like going the slightly lower risk and it's actually going to be high probability that it's going to work, would you advise them to go betting the farm?
I think it's sort of it's a great question. I think it's up to the founder, right? So I think some founders would be happy to do that and some founders won't. So I have a lot of founders who take smaller exits, and some of them have become angel investors themselves now, which is great. But and I'm very happy when that happens. It's just, I guess, in the beginning, what is the sort of realm of possibility, And so even for myself, like, would you rather take if you're presented with a smaller exit or you're presented with a lower risk course, would I rather take more certainty of a smaller number than less certainty of a high number? I'm actually probably indifferent from a risk return perspective, so I really feel it's up to the founder. But then on day one, I feel like both that company still has the same amount of risk.
Yeah,
if that makes sense. Yeah.
I think for me, it's like I tell people up front that I'm going to be the high risk, ambitious, irritating guy that's always going to ask you to bet the farm. But I really tell them the same thing, that it's like it's your choice. But I also invested in a company where I feel like the purpose is the biggest thing for me, and I think that if they're able to do that, I don't actually care if the returns. I think they should build a sustainable, economically sustainable company, not have to continuously fundraise. But I think at the same time, if it's a 2x return or a 50x return, if they save the planet, it's fine. But of course, that's a rare case.
Yeah.
But about that, like, what kind of companies are you in love with? Like, what are, like, if you look at your due diligence process, when somebody comes out and raises an angel round, like, I know there's no like real due diligence process, but like at least I have a structure, and I think my structure is often like I have a list of stuff I hate, and if they tick any of those things, I don't want to do it. So like, we outsourced all the development. We have this great development office in Romania, which is not ours, we used to be 4 founders, but 2 left, but they still own the stock, is like, or whatever. And there's a list of those. And then when I checked off that list that nothing goes bad, then my other list, which is completely emotional, which is like, do I like the person? Do we have the same values? Is the person super ambitious? Do they do something where if the biggest competitor in the world copied what they do and this company goes bust, would I still be happy? Like, if they change the planet and like if they do ad optimization, I wouldn't cherish, right? But if they save the planet, I would. But like what? And then I introduce them to other angels, just as you said about the CTO at Spotify. I go like, okay, I like this. What do you think?
Yeah.
What do you think? Well, that's how we know each other. But how do you guys do?
I think for me it's the same. I need to be passionate about it because, as you said, there's so many companies out there to invest in that will probably be a good financial deal to make. But if I'm not into it for real, it's not going to be fun for either me or the entrepreneur. And I also want to work with companies where I feel like I can add real value. So I tend to be drawn to consumer brands and health tech and sort of areas where I'm passionate about and where I see that they're doing something that's good for the world in general.
Yeah. But I mean, like, does that also mean that how much is it the passion about the people and how much passionate for the cause? Is it both?
I think it's super important that you are sort of connecting with the person because they are the one who's gonna make it or break it and be the person who will take this from an idea to hopefully a successful big company in the end. So it needs to be someone that you kind of feel like you understand and that you get to know and that you hopefully share the same values as, because if you do, then it's going to be much easier and way more fun. And when it comes to the question around the process, how do you understand that about a person? I think that's a bit of a tricky one.
Yeah.
And at least both you and I do a lot of meetings over Google Hangout or Skype. So how do you get that across in a video call? And I don't really know the answer, but I do have some sort of internal process where I shape my opinion about a cause and a person and their ability to do what they are saying they will do.
One of the reasons I actually love doing stuff on Hangouts or Zoom is because my biggest weakness is I fall in love with people. So if I meet them in person, I always think they're great. But I meet them in Hangouts, I go like, nah, that was a crappy person. And like, it's much easier for me to not fall in love. So
it makes it a bit tougher for them because they need to get across even though there's a screen.
But I'm going to be that later anyway. So like, what about you, Jeremy?
I think for me, I don't actually have a checklist or a process. I think to me the deal breaker is like, can I build a relationship with this person? It's over a long period of time. And that's probably the most important thing for me. And then once that's sort of settled, then it really comes down to, can this sort of person get me excited about what they're doing? So for me, I'm a sucker for the sort of like authentic narrative, where they've looked at this problem, they really think about it, they talk to all their friends about it, they're kind of annoying to all their friends because they're talking about it all the time, and then you can sort of feel that energy, and they sort of convince you that something that you thought was kind of not that interesting or not that boring or kind of boring or you never even imagined before is possible. I think that's sort of the magic moment why I think probably all of us do this is great. I think that's what I always look for.
Yeah, I agree on that. I think that it's like, I feel that one thing I kind of changed my mind about the last 2 years is that I actually almost avoid investing in people who don't have that manic conviction because I think they're not going to be able to fundraise later. Like if they get me to invest because I like them, the problem is, as we talked about VC funds don't like people, they look at returns.
Yeah.
But if you're crazy passionate about whatever subject, maybe you're the one. So I agree. I think that previously I could have been I like the area, it's logical, but now I'm more like, you're not crazy enough, I'm sorry.
You need to be kind of obsessed with solving the problem,
And I think more founders should actually think about what they're actually obsessed about.
Yeah.
Because I think
and what problem they're solving. What is the actual value of what you're doing?
And I mean, one company I invested in, they are really obsessed about the process of building companies. And I think that's fine, because they're so obsessed about it that's fine. But I think, like when you meet a lot of founders, they're not obsessed about anything. They just I'm going to do a startup because most of my friends are doing startups.
Yeah.
And that's probably the cool thing. And I want to be on TechCrunch front page.
That would be a problem for me. If you're just in it to be in a cool environment or want to make a lot of money, then I don't think that energy will make you last or give you that persistence and grit that you need in order to truck through the journey of a startup.
Yeah, and it is hell. It is.
Yes, it's like a roller coaster, and every day is super stressful, and there's a lot of highs and there's a lot of lows.
Yeah, exactly. Yeah, I think that I want to get people before I get to questions. I want to get if you want to advise people of how to actually get into the ecosystem if they don't know anybody, because we said Twitter. What are other ways that people can actually reach angels in general? Like, how do they get in?
I would say attend conferences like this. Mm-hmm. Network every opportunity you can. Go to all of the meetups in your local community. Maybe start one of your own. Research and understand who is kind of into what sector, and try and be helpful and bring value. Be active on Twitter, social media. See what people are talking about and join the discussion.
Yeah.
But bring value. You cannot just be a bystander and want to tag along. You need to sort of contribute.
Yeah.
Maybe do research, maybe do an internship. I know a lot of the US schools have this sort of VC clubs.
Yeah,
Maybe that's a way to get into it. Maybe start one in the Nordic universities if they don't have it.
Yeah. Which is not like a business plan competition, but actually something real. What about you?
I mean, I would say that, you know, as by definition, all sort of great angels or great investors are sort of very well networked because, you know, they sort of have to rely on that for their deal flow. And so I think that's the reason why, you know, everyone's so obsessed with sort of the requirement of the warm intro. So, you know, if you can get sort of like 1 or 2 nodes in the network, you know, it tends to sort of like just flow into itself. And then obviously there's, you know, I think this day and age is great. You know, there are more ways where if you build a great product or you get a great following of some kind, you know, there are multiple avenues in which you can sort of advertise that or you can be recognized, like Product Hunt or so on. And I think today is a great time for that. So there's actually more avenues. Yeah.
I don't understand why people are not just I was speaking at a university the other day, and somebody said, like, how does one become like a top VC in X what years, whatever. And what I said, like, because I got angry, so I said, like, what I would do, I would pick a niche subject, like take something which is not mainstream yet in the investment world, esports, mRNA, whatever, and then just blog about it, do a podcast about it, interview everybody, get into and just like be the manic, this is how we do this thing. And within 2 years, a VC will reach out and say, do you want to join us as an associate? Otherwise, you start a company or something. And I promise you, like, if you're going to be the crazy esports analytics blogger, I promise you, that's going to be an avenue for work. And most people, then the same guy raised his hand again and said, is there an easier way? No, I didn't answer that question.
I have one great example in our community. There's a guy called Michael Josephs. He used to work for the city and driving the sort of startup initiatives. But he put together really interesting blog posts about the different sectors. So he kind of did research that I could use. And he also talked about sort of the startup phenomena, but put it into a context that was useful for others. I think that's a great way to, you know, make yourself valuable.
And exactly, you don't have to even be niche in a subject. You can say, take all the startups at Slush and categorize them in whatever, 58 different categories and structure. That would be great in infographic. People will be like, oh, that was a great one.
Yeah.
There are just so many easy things, like quote unquote easy, still a lot of work. But yeah, one question from the audience before time is running out. What's your view on convertible notes, safes versus equity? I'm a convertible note guy. I think that convertible notes, if an investor says they're joining an angel round and they want equity, I think they're the wrong person.
I don't have a problem with it either.
Yeah,
I love notes. I love convertible notes. I love safes. For me, I like the sort of the lightest document possible at the earliest rounds, and just kind of like make things easier for everyone. And you know, at the end of the day, the larger the document, the more complex it gets. And especially for an angel, if you're coming in, or even a seed round VC, and if you're trying to put in something too onerous, what people don't realize is that the next VC kind of wants that too, or wants something even better, and the next VC comes on, and by the time you go down the stack, you're basically holding common stock, effectively. So it doesn't really matter. I would say, you know, make it as easy as possible.
And also the good thing about a convertible note is, like, if I meet one of you guys and I want and like you fall in love with me and I fall in love with you, you sign the convertible note and I can start working with you now.
Yeah.
Whereas if we are looking for herding the cats up to a big shareholder document, everything, that's going to be like, yeah, not everybody's aligned. We don't have the full round yet, and you might be helping out, but you're not still in it, maybe. So I think that's a good thing when doing almost up to, I don't know, 600-700K, I think, US. You could totally go convertible notes.
Yeah. I mean, with one caveat, which I would say that, like, it's important to realize that a convertible note or safe note is actually very investor unfriendly, right? So you're putting a lot of trust into the founder's hands, right? So if the founder decides, oh, I raise a safe, but I'm going to go raise even more and then more and more and more, and like sort of like, and yeah, you sort of, there's really not a lot that, you know, at least in the standard safe, that an investor can do. So I can understand why quite a lot of other investors are not happy with that. And it may not be the best thing for their, like, for example, a VC might not be able to do that because it's not the best thing from a control perspective for their LPs. Yeah. But I mean, I think as angels, I think it's great.
It's the chill thing, yeah. Thank you very much for listening. Reach out to us on Twitter if you have other questions. Thank you very much. Bye.
Thank you, guys.